Welcome to FXtech's USD/CHF analysis for November 3rd through 8th, 2025. This week marks a critical juncture for the Swiss franc pair as it navigates a corrective bounce following 6 consecutive days of gains. We'll examine the technical landscape, key support and resistance levels, and provide actionable trading strategies for both short-term and medium-term horizons. Our analysis draws from multiple authoritative sources, including TradingView, Investing Live, Action Forex, and Daily Forex to give you a comprehensive market perspective. Let's dive into the details and uncover the opportunities in this dynamic currency pair. As of November 7th, USD/CHF is trading at 0.80504, up 0.33% on the day. The pair has experienced significant volatility this week, reaching a 3-month high of 0.8123 on November 5th before pulling back. This represents the highest level since August 11th, marking a critical technical milestone. The 6-day rally from approximately 0.8000 added roughly 123 pips, demonstrating strong bullish momentum. However, profit-taking has emerged near the 0.8123 resistance, causing a retreat toward the 0.8071 to 0.8076 support zone. The pair is now testing the 100-hour moving average, which serves as a key short-term barometer for both buyers and sellers. USD/CHF's 6-day rally from October 31st to November 5th was remarkable, starting from the 0.8000 level and peaking at 0.8123. This represented the highest level since mid-August, breaking through multiple resistance levels with consistent daily gains. The rally built momentum steadily over the first 5 days, with the 6th day showing a modest advance of just 1 to 2 pips, closing at 0.8102. However, November 6th and 7th saw profit-taking emerge, with the price retreating toward 0.8071 to 0.8076. This pullback appears to be profit-taking rather than a reversal, as the pair is now testing critical support at the swing area and 100-hour moving average. Current price stands at 0.80504 as of November 7th. On the resistance side, we have 0.8123 as the recent high and immediate resistance. The 200-day EMA sits at 0.82, representing a significant technical barrier. Beyond that, 0.8332 marks the 2023 low and critical long-term resistance, with extended targets at 0.85 and 0.88. For support, the critical swing area between 0.8071 and 0.8071, 0.8076 aligns with the 100-hour moving average. Below that, we have psychological support at 0.80 where the 50-day EMA resides, followed by 0.7872 and 0.7828 as recent swing lows. The downside target sits at 0.7382, representing a 100% projection level. Action Forex's weekly outlook suggests USD/CHF is in a corrective pattern from the 0.7828 low. The initial bias remains neutral, with the pair consolidating recent gains. A break above 0.8213, which represents a 138.2% projection of the move from 0.7872 to 0.8102, would target the 200-day EMA at 0.82. Sustained trading above this level could pave the way towards 0.8332, the 2023 low and a critical resistance zone. However, Action Forex warns that the medium-term outlook remains bearish unless USD/CHF can decisively break above 0.8332. A break below 0.8007, the 55-day EMA, would signal resumption of the decline towards 0.7828 and potentially 0.7382. The Swiss National Bank has repeatedly warned against excessive franc strength, threatening intervention if necessary. This verbal intervention provides a psychological floor for USD/CHF, limiting downside potential. Historically, the SNB has actively intervened in FX markets when the franc becomes too strong, impacting Swiss exports. Currently, the SNB remains vigilant about franc appreciation. From a technical perspective, 6 consecutive daily gains from October 31st to November 5th suggest strong buyer interest. The formation of higher lows indicates potential trend reversal from recent bearish momentum. The price reaching 0.8123 broke through multiple resistance levels, with a potential double bottom pattern forming between the October low and current support. Based on the SNB intervention context and bottoming pattern signals, we have a compelling trading strategy. For entry, buy dips to the 0.8071 to 0.8076 support zone, which aligns with the 100-hour moving average and swing area. Place stop losses below 0.7828, the October low, to protect against downside breaks. For upside targets, aim for 0.8213 initially, representing the 138.2% Fibonacci projection, with an extended target at 0.82, the 200-day EMA location. The risk-reward setup is favorable, with the SNB providing downside protection and technical breakout potential offering upside opportunities. The combination of central bank intervention threats and emerging bottoming pattern creates a compelling bullish case with clearly defined risk parameters. For the short term, spanning 1 to 2 weeks, buy on dips toward the 0.8071 to 0.8076 support area, which coincides with the 100-hour moving average. Place stops below 0.8050 to limit downside risk. Target 0.8123 initially, the recent high, then 0.82, the 200-day EMA, on a breakout. This offers a favorable 1 to 2 to 1 to 3 risk-reward ratio with a defined support zone. For the medium-term outlook, we assign a 55% probability to the bullish scenario, where a break above 0.8123 confirms continuation towards 0.82 and potentially 0.8332. The bearish scenario carries 45% probability, where a break below 0.8071 signals resumption of decline towards 0.7828 and potentially 0.7382. For the next 1 to 2 weeks, we expect USD/CHF to trade within a range of 0.7950 to 0.8150. This tight consolidation zone follows the 6-day rally and represents a critical decision point. Key support at 0.8071 to 0.8076 aligns with the 100-hour moving average and is critical for short-term direction. Key resistance at 0.8123, the recent high, must be breached to confirm bullish continuation. U.S. economic data and Fed commentary will drive near-term volatility. For the 1 to 3 month horizon, we expect a broader range of 0.7700 to 0.8350, reflecting significant upside and downside potential. Major resistance at 0.8332 represents a critical long-term level, while major support at 0.7828 and 0.7700 define downside boundaries. Upside risks include SNB intervention threats providing a floor for USD/CHF, strong U.S. economic data supporting dollar demand, improved global risk appetite favoring USD over safe haven CHF, and technical breakout above 0.8123, triggering momentum buying toward 0.82 to 0.8332. Downside risks encompass geopolitical tensions or market volatility, triggering safe haven franc demand, expectations of Fed rate cuts weakening the dollar, technical failure below 0.8071 to 0.8076 accelerating decline toward 0.7828, and continued profit-taking pressure after the extended rally. For short-term trading, buy dips to 0.8071 to 0.8076, with tight stops below 0.80. For medium term, monitor the 0.8123 breakout for bullish confirmation. USD/CHF remains in a corrective bounce phase with the 0.8071 to 0.8076 support zone critical for near-term direction.